Hello traders everywhere, Adam Hewison coming to you from a very wet and rainy Maryland today. What we're going to be looking at is the relationship between crude oil and the stock market. Obviously things are rapidly unraveling in Iraq, which is causing crude oil prices to move higher. Obviously there's some very important oil fields in that area which potentially could be lost to the rebels in this particular time. So the question is, how high can crude oil go? And if it does go that high, how is that going to affect the stock market? We're going to show you some early warning signals that you can use to protect your investments and also to profit by the moves that are happening in the Middle East right now. So looking at crude oil, we're looking at a chart that's going back to early part of the year. You can see crude oil was trading around about the $90 level. We're currently trading at 105. Looks like we're set to go to 110 technically, and how we came up with that quick calculation I'll show you is this way. Looking at the swings here, you're going from, let's say, this area here up from, let's say, 96 up to here. Let's call it 102, 103. So you've got $7 from here to here. If you go from this level here, 98 up to these levels here, we'll call it 104, that's $6. And if we go from, let's say, this level here, 102, we can take an average of these, say 6.5. We can say 108 to 110 perhaps. So I think that could be very easily done. On a bigger picture, we could see this market going actually up to the 125, 130 level. And let me give you the bigger picture. So let's just clear the screen and scope this out just a little more. So if you look at this on a longer term picture, you can see how this market has been sort of moving sideways in a very large sort of basin type effect here. Now we've already cleared this area here. Okay, so we've got all this action below, and let's say all the way going down to 85, even to 82, but we'll call it 85 up to these levels, which was 100. That's 15. So we can extrapolate that out and say, okay, we can go to 115 here, and we could maybe even see this market go higher, particularly if we take out this area right here, which is right around the 108, 109 level. Excuse me, it's lower than that. It's about the 106, 107 level. So if we go over that and close over that area, there's not going to be much above this. The last time we saw prices like this was when crude oil moved to 145. There's a lot of speculation in the market at that point in time, but that speculation could come back very easily and push this market up much higher than even we anticipated going. So again, the trend is your friend. The trend is clearly up, and if we put our trade triangles in, you'll see exactly what I mean by that. Now with crude oil, we trade crude oil with the weeklies and the dailies. So again, if you want to just look at that and go into our trade triangles, you put the weeklies on, boom, and we'll scope that in much closer so you get a better idea. So you can see the weeklies came in right here. So the trend at this point in time was higher, move there, but we use the dailies for timing. Now this is what gets you a little bit interesting. So here's the last signal we had was right here, and that was a daily signal at 103.07, currently trading at 105.88. So again, the trend is clearly up, and use the dailies as an early warning signal to get out, but use the weeklies for the trend. If the green weekly trade triangle is in place, you want to trade crude oil from the long side. Now how is all this going to affect the stock market? So let's take a look at the stock market. As you can see, we made our lows in 2009, in March of 2009, right here around the 700 level. And from that period, we've just sort of gone straight up. And we got very close, very, very close to the 2000 area, which was a big number for a lot of traders. Now the question is, are we going to continue up, or is high gasoline prices at the pump going to push this market down? That is something I don't know, but remember, when the market goes down, it tends to go much faster. Boom, boom, boom. It takes a long time to get this market going higher, like here, but it only takes a few weeks, or a month to push it down very dramatically. So here's what you want to do. So you want to use the monthly for the trend. Now that's where the monthly trend kicked in at 1,867. So clearly in the positive, but the weeklies are what you use for timing. So the last weekly signal was right here, and that came in at 1,884. So again, you're long, but if we see a red weekly trade triangle like this, exit immediately. That's what you want to do. So use that as your early warning signal to get out of the stock market should you see a weekly red trade triangle on your chart. Hey, I'm Adam Hewison. Hope this helps you. And obviously we have a very interesting and very dynamic situation going on in Iraq, and it's likely to continue and probably not get better. So pay close attention to these markets, particularly with crude oil and how it's going to affect the stock market. Have a great trading day, everyone.